I'm Martin King, analyst at Edison Investment Research. And I'm here today with Chris Morgan, who is Senior Investment Director with Amber Infrastructure, which is the investment advisor to International Public Partnerships, INPP. Morning, Chris. Chris, couldn't I get you to start by just giving a brief introduction to INPP, what the investment proposition is for investors, how you position the portfolio and how you look at capital allocation?
Sure, and thanks for having me. We're ultimately looking to maintain a diversified portfolio of low-risk, essential public infrastructure assets that generate consistent and predictable returns for our investors, whilst delivering environmental and or social benefits to individuals or communities that use the assets as part of their daily lives. And we achieve those aims by investing in assets that, for the most part, are generating availability-based or regulated revenues. Those revenues are generally paid to us by government or government-backed entities. There's often a very high degree of inflation linkage explicitly built into the underlying contracts. And we use robust capital structures, so there's limited downside risk to higher debt financing costs. We then further reduce risk by making sure the portfolio is well diversified, not just in terms of geographies, but in terms of the counterparties that we use on the assets, as well as the nature of the assets themselves. So we've got a real range of assets in the portfolio, from energy, transmission and distribution. We've got public buildings such as schools, libraries, police headquarters, even to the 25-kilometre super sewer that's being built under the River Thames in London to aid the issue of sewage pollution in the river. So there's a real range in terms of the nature of the assets we have in the portfolio, but the key thread stringing those assets together is both the predictability and consistency of the returns they generate, as well as the fact that they are supporting the delivery of essential public services. And in terms of how we actively manage the portfolio, really our focus at the moment is on optimising the portfolio. So over the last 18 months or so, we've undertaken asset realisations that total around 260 million from a number of the subsectors we're invested in. And importantly, those sales have been done at prices that are in line with previously published valuations, so this should give investors confidence around the value that we ascribe to our assets. And from those realisation proceeds, we've ultimately reallocated capital to both reduce the risk within the portfolio and to enhance returns. And fundamentally, the nature of the characteristics of the underlying assets, the way we actively manage the assets, come together to create what has been and what is a very resilient portfolio of assets. And if we look at history, I mean, INPP was IPO'd back in 2006. It's been around for around 18 years. It's been very well tested throughout that time. We've had varying macroeconomic conditions, geopolitical events, and of course a global pandemic. Yet throughout that 18-year period, it has continued to perform very well, delivering investors with growing dividends every year since the IPO.
Chris, amongst your investments, Cadent is a very important investment for you. Can you just talk about the outlook for the company, particularly in the context of net zero carbon?
Sure. And just in terms of an introduction to Cadent, this is a business in the UK that owns around 130,000 kilometres of pipelines, most of which are underground, but they're used to distribute gas to consumers across the country. So consumers being homes, businesses, stores, hospitals, etc. So the assets that Cadent owns are a really critical piece of the UK's infrastructure. Now, Cadent isn't an energy supplier. It just owns the physical pipelines. And as consumers, we, of course, can't choose which pipelines we have because typically there's just one pipeline connecting our homes or businesses to the grid. And therefore, Cadent's assets are monopolistic in nature, and the revenues are therefore regulated by Offshore, the UK's energy regulator. And there are a number of attractive features of Cadent, but one key one for us is the nature of that regulated revenue stream, where there's a great deal of predictability in the revenues that Cadent can generate, and obviously that helps us meet our wider objective of delivering predictable and consistent returns to our investors. The decarbonisation of the energy system in the UK is a really important work stream if we're to meet our net zero ambitions as a country. But there are various challenges ahead in terms of transitioning to a sustainable, affordable and secure energy system. And one overarching challenge is around the reliability of the system, because gas is ultimately considered a transition fuel. So we moved from coal through gas to renewable energy technologies. And renewables are fantastic, but they are intermittent. And therefore, when the sun doesn't shine or the wind doesn't blow, the UK turns to natural gas to generate electricity. And the gas distribution networks in the UK, of which Cadent is the largest, obviously have a really critical role to play in terms of facilitating the transition by continuing to safely and reliably deliver gas to consumers and thereby facilitate and enable the increased use of more intermittent renewable energy technologies. So in summary, the extensive nature of Cadent's assets, the key role that it will play in the transition, and the inherent protections afforded to Cadent through the regulatory framework provide us with a great deal of confidence in terms of the positive outlook for the business and the key role that it will play in the energy system over the coming decades.
Chris, you mentioned Tideway in your introduction, the London super sewer. Large infrastructure projects like that can be quite challenging, particularly in terms of timing and cost. Can you talk about your experience with Tideway?
Yes, of course, and I'll just start perhaps with a brief introduction to the asset. And we're obviously going to talk about the issue in relation to the River Thames and London, but of course this is an issue, a sewage pollution issue that it spreads across the country. So currently when it rains, what you have going into the existing sewage system in London is combined rainwater and raw sewage. And that system was built in the mid-1800s and is just not able to deal with the sheer volume of flows. And therefore what happens effectively is that sewage system needs to release overflow into the River Thames. So at the moment there's an awful lot of sewage pollution that's going into the River Thames every year. Now, as you said, Tideway is almost complete. Construction started back in 2016. Major construction works are complete, but we're just awaiting the start of the system commissioning phase. And the system is slowly being incrementally activated because, of course, there are a number of sites across London. So it's already starting to clean up the river. But once it's fully operational in 2025, it should be able to intercept around 95% of the polluting overflows that would have otherwise gone into the River Thames. And that will, of course, have a hugely positive impact on the River Thames, on Londoners, people visiting London, and, of course, the wildlife in the river. So it's really an environmental project. Now, Tideway benefits from bespoke regulatory arrangements that were granted to it by Offshore, the UK's water regulator. And those arrangements include cost-sharing mechanisms, but they also entitle Tideway to generate an income during the construction phase, and that income is based on the value of the asset that's being built. In addition, the government provided Tideway with a support package, and that support package ultimately reflected the unique nature of the Tideway asset and provided investors with protection under a range of theoretical downside scenarios. And it's the bespoke regulatory arrangements coupled with the government support package that combine to represent an innovative delivery model, which has ultimately helped to reduce the overall cost of the project for consumers, and is a model that the UK government are talking about using further for other large-scale public infrastructure projects in the UK. And Tideway is on track to deliver the project within the initial cost and schedule envelopes that were envisaged at the start of the project. So it's been a really positive experience and a real demonstration of the key role that private capital can play in the delivery of large-scale public infrastructure projects.
Chris, your offshore transmission assets, OFTOs, are a big part of the portfolio, and they've been increasing over the last few years. Can you talk about the attractions of that sector for you?
Sure. Well, OFTOs, or offshore transmission owners, own the electricity transmission infrastructure that connects offshore wind farms to the onshore grid. So the way it works is that a wind farm developer will install the wind turbines out in the sea, they'll install the connecting infrastructure, and then Ofgem, the energy regulator, will manage the process through which those offshore transmission assets, not the wind turbines, but the transmission assets, are sold to an OFTO. And we first invested in the sector back in 2011, and we've continued to invest in the sector such that OFTOs currently represent around 20% of the INPP portfolio. And there are a number of attractive characteristics. Firstly, it's the stage of the acquisition. So we buy these transmission assets when they're already complete, they're already operational, they've been commissioned, and therefore the investment is immediately yielding. The second point is around the nature of the revenue stream. So upon acquisition, we're granted with a licence by Ofgem, and that licence entitles us to an initial revenue stream that's typically 20 to 25 years in duration. And during that period, we receive availability-based revenues that are linked to an inflation index. And therefore, during that period, we have no exposure to the amount of electricity that's produced by the offshore wind farm or the price of electricity. Again, the nature of that cash flow helps us to meet our wider objective of delivering predictable and consistent returns for our investors. And then it's the environmental contribution, because these OFTOs are allowing offshore wind farms to transmit their green electricity through to the onshore grid. So the OFTOs are helping to contribute to the transition to a cleaner energy system in the UK. And if we look at INPP's OFTOs as an example, they have the combined capacity to transmit sufficient renewable electricity to power the equivalent of almost 4 million homes. So ultimately, the OFTOs support INPP's objective of delivering predictable, consistent returns to its investors while supporting the transition to a cleaner and more resilient energy system.
Chris, public-private partnerships, PPPs, were a key part of the original portfolio and a large part of the portfolio now. Could you just say a bit about those, how they're performing, but also any future opportunities you think there might be in that area?
Yeah, a PPP is a procurement model that's been used by various governments, both in the UK and overseas, to deliver infrastructure assets. Typically, you have a private sector consortium, and that will be responsible for designing, building, financing, operating and maintaining the facility, and in return will receive availability-based revenues from the public sector for the duration of the PPP contract, which is typically 20 to 25 years. So the nature of PPPs in our portfolio varies quite a lot. So we've got a lot of public buildings such as schools, police headquarters, libraries, courts, and even some transport assets. But I suppose the key point, and I mentioned this in the introduction, is that these assets are all supporting the delivery of essential public services. And in the vast majority of cases, they're generating availability-based revenues. And if we look at the performance of the assets in our portfolio, these make up around 40% of the portfolio for INPP, and they're performing very well. So average availability is around 99%, so they're performing well for our public sector clients and hence for our investors. And for the vast majority of PPPs, the assets and the associated services need to be handed back to the public sector at the end of that contract, the circa 20 to 25 year contract that I mentioned. And this is something that the handback process is something that people are talking about a little bit more in the industry now, because some of the earlier PPPs are coming towards that date. But actually the vast majority of INPP's PPP assets won't be handed back until the mid-2030s or later. And that brings me on to your point around investment opportunities. And I guess the first point to say is that we don't need to make any additional investment opportunities in order to meet the projected returns. But I think there will be a significant opportunity set for us. And I think that opportunity set will be driven by various factors and themes. The need to upgrade and repair existing and ageing infrastructure, and changes in demographics, digitalisation, the need to meet decarbonisation targets, and more generally ensure we have climate resilient assets. So I think the opportunities will be there for us, and I think it's reasonable to say that governments are unlikely to be able to fund that infrastructure spending need themselves, and therefore I think there's a key role for private capital to play. And if we look at the track record of INPP, we've continued over the years to source and execute on attractive investment opportunities, and I think we're well positioned for the future pipeline.
Chris, that's great. Thank you very much for that. I mean, what I'm hearing is this is a relatively low risk proposition in the infrastructure sector, and that's generating good, predictable cash flows and underpinning that long-term dividend growth with plenty of opportunities in the future to grow. So thanks very much.
No, thank you. It's a perfect summary. Thanks.